All right, listen up. Silver just went absolutely wild, and if you're holding it right now, your heart's probably still racing, and honestly, I get it, because what we just witnessed wasn't your typical market move. This was deliberate chaos designed to break you. So silver rocketed toward 80 like a freight train with no brakes. Everyone's screaming that we're going to the moon, and then boom, it reversed so violently that traders are still picking up the pieces. But here's what nobody's telling you. This wasn't a failure, this was a test, and most people just failed it. The market doesn't care about your feelings. It cares about finding out who's actually committed and who's just along for the ride, hoping to get rich quick. And right now, we're in that brutal phase where conviction gets separated from hype. Now, before you think this is just another crash story, hold on, because the spring is coiling tighter than ever, and what comes next could make that 80 spike look like a warm-up, but only if you understand what's actually happening beneath the surface instead of panicking at every red candle. See, when silver hit 80, the market split into two camps instantly. You had people screaming, "It's the top, sell everything, run for the hills." And then you had the other side going completely euphoric, talking about 120, 200, even crazier numbers. And you know what? Both groups are making the same mistake because they're trying to predict certainty in a market that thrives on chaos. I'm not here to tell you silver's definitely going to 100 or crashing to 50. I'm here to show you how to read what's actually happening so you don't become exit liquidity for smarter money. The facts are simple. Silver moved up fast, hit a major psychological level, then snapped back aggressively with sharp rebounds mixed in. That's not a top, that's compression, and compression stores energy for the next explosive move. Think of it like a spring. When you squeeze it down hard after stretching it out, that thing's loaded and ready to launch. We just don't know exactly when or in which direction, but the setup is undeniable. Now, here's where it gets interesting and where most people completely miss the bigger picture. You cannot understand silver without watching gold first, because silver doesn't lead, it amplifies. Gold is the engine, silver's the turbocharger. And right now, gold isn't rising because people are bored or chasing shiny things. It's rising because the world is genuinely stressed out. We're talking geopolitical tensions that aren't going away, fractured trade relationships that are reshaping global commerce, countries quietly shifting their reserve strategies away from dollars, and gold is their answer because gold is portable sovereignty. It doesn't depend on anyone's promise or printing press. When gold strengthens like this, it's not about inflation data or interest rate predictions. It's about trust breaking down at the structural level. And if gold still has room to run, which based on the macro environment it absolutely does, then silver sitting still makes 0 sense. And that's exactly why smart money isn't selling yet. But let me hit you with the psychological trap that's catching everyone right now, especially if you bought silver way lower. You're sitting on massive unrealized gains that feel incredible, and your brain is telling you that holding is discipline. But is it really? Here's the test, and be honest with yourself. If your entire silver position got accidentally liquidated right now at current prices, would you immediately buy it all back without hesitation? If your answer is no or even maybe, then you're not holding out of conviction, you're holding out of inertia and fear of regret. And that's dangerous because greed loves to disguise itself as patience. I'm not saying sell everything. I'm saying know why you're holding and have an actual plan instead of just hoping the chart keeps going up forever. Now, let's talk about these insane price targets people are throwing around. 100, 120, 200. And look, I know they sound crazy, but here's something most people don't realize about silver. This market is tiny compared to gold, like absurdly small. The entire global silver market at times gets valued roughly the same as one big tech company. Let that sink in for a second. One company versus an entire critical metal market, and that mismatch creates the potential for violent repricing when demand shifts even slightly. Silver isn't just a monetary metal, it's industrial, it's technological, it's squeezed between investment demand and actual physical use in everything from solar panels to electronics, and that dual nature makes it behave erratically. But here's the thing about supply that everyone gets wrong. Total supply doesn't matter nearly as much as available supply, because yeah, there's silver sitting in households, antiques, jewelry, long-term vaults, but that's not hitting the market anytime soon. What matters is the tradable float, the actual available metal that can be bought and sold right now. And when that float gets thin while demand surges, prices can go absolutely parabolic in ways that seem impossible until they happen. So when people ask me if it's too late to buy silver, my answer is blunt. different. If you're asking that question, you probably don't have a clear thesis, and you're about to become someone else's exit liquidity, because buying volatile assets without defined risk limits and emotional control isn't investing, it's gambling, and the casino always wins eventually. The real question isn't will silver hit some magic number, it's can you handle waking up to a 15% drop without panic selling at the bottom and then watching it rip back up the next week? Because that's the reality of silver. It's not a calm ride, it never has been. And if you wanted smooth and predictable, you should have bought bonds, not the most volatile major metal on the planet. Now, let me zoom out and explain why metals are even moving like this in the first place, because it's not just speculation or chart patterns. There are two massive structural forces at play: geopolitics and industrial policy. The geopolitical tension we're seeing globally isn't some temporary news cycle, it's a fundamental reshaping of alliances and power structures, and when countries get nervous, they buy gold, plain and simple. But the industrial side is just as critical and maybe even more underestimated. We're entering a new era of industrial spending with reshoring, infrastructure buildouts, defense expansion, and the entire artificial intelligence revolution. And all of that requires raw materials, lots of them. This spending gets financed through expanded balance sheets, which creates persistent pressure on real assets, even if we don't see runaway inflation immediately. It's a slow grind upward that punishes cash and rewards hard assets. And speaking of industrial demand, can we talk about copper for a second? Because copper is the silent giant that nobody's paying enough attention to. This metal is the backbone of electrification, data centers, automation. Every AI server farm, every electric vehicle, every power grid upgrade needs massive amounts of copper. And whether you think AI is overhyped or not, the physical infrastructure is real and being built right now. And markets don't respond to narratives, they respond to shortages. When supply can't keep up with demand, prices move, period. And copper's setup is arguably just as compelling as silver's, but with less speculative froth, so keep that on your radar. Now, I need to address the constant fear some people live in about market crashes. And look, I get it, downturns are inevitable and sometimes they're brutal, but if you spend your entire investing life sitting in cash waiting for the perfect collapse, you're gonna miss years of compounding and actual wealth building while being technically correct about risk. Markets are like weather. You prepare for storms, you diversify your exposure, but you don't stay locked inside your house just because it might rain someday. That's not rational risk management, that's paralysis disguised as caution. So back to silver specifically, what does a rational investor actually do after a sharp vertical move like we just saw? First, you define what would invalidate your entire thesis, like if gold loses its strategic bid or if financial conditions suddenly tighten severely. Those are your red lines. Second, you size your positions according to your actual risk tolerance, not some all-or-nothing gambler mentality where you're either all in or all out based on daily price action. Third, you remember that market tops are almost never single clean events. They're messy processes with erratic moves that suck people back in and shake them out repeatedly until exhaustion sets in. The key is knowing your method before the market forces you to decide, because improvisation under stress is expensive and usually wrong. I genuinely want to know what you're thinking right now if you're holding silver. Are you confident? Are you scared? Are you tempted to sell or buy more? Drop your thoughts below, because collective sentiment often reveals more than any headline or analyst report ever could. And honestly, I learn as much from your perspectives as you hopefully learn from mine. What I'm trying to do here is cut through the marketing noise and extract actual signal from chaos, because there's a difference between logical projections based on market structure and mania-driven narratives that sound great until they don't. Extreme upside scenarios are possible, yes, but the goal isn't to sell at the exact top tick, it's to secure meaningful gains and stay capable of participating in future cycles instead of holding through an entire round trip like so many people did in previous bull markets. And just briefly on oil, since someone will ask, oil is politically constrained right now but fundamentally undervalued relative to long-term energy demand. It's not as sexy as metals, but it's worth watching, especially if geopolitical risk escalates further. True diversification isn't just owning different assets, it's diversifying your economic drivers, and silver sits at this unique intersection of monetary demand, industrial use, speculation, and risk aversion, which is exactly why it moves so erratically compared to almost anything else.
else. So here's my philosophy and what I'm actually doing. I'm not selling my silver yet, and that's not greed talking, it's because gold strength and the broader macro setup suggests this cycle might still be developing. But I'm watching closely, and I have clear lines drawn where if things change, I'll act decisively. The moment logic gives way to pure mania and everyone's talking about silver at cocktail parties, that's when I'm out, but we're not there yet. Markets reward preparation, patience, and humility. They punish FOMO, over-leveraging, and emotional decision-making. And if you can build positions that can withstand volatility while maintaining your sanity, you're already ahead of 90% of participants. Silver is volatile by nature. That's not a bug, it's a feature. And those who plan ahead, manage risk, and control their emotions will be the ones still standing when the dust settles, while everyone else got shaken out chasing daily price movements. Stay disciplined, stay rational, and remember that the market's job is to make you question everything you know precisely when you need conviction most.